Tuesday, September 6, 2022, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at how physical gold is flowing from west to east as the bullion banks continue to manipulate the price of paper, gold and silver, in order to keep their central bankers' credibility from totally evaporating. The reason they do that, of course, is because they want to make the dollar and other currencies look credible vis-a-vis gold and silver. And why is that? Well, because they are really historically money, and that the currencies we use today are anything but. So we're going to look at that today. Before we go into that, though, I wanted to talk a little bit about what's going on in the UK. We've got a new prime minister being on today. I think she usually goes to Buckingham Palace to get her blessing, so to speak, from the Queen. But this time around, she's flying to Scotland because the Queen is over there, because she's not very well. So that's how it happens. But what I notice is that everybody, not just the lefties or Labour, everybody wants a bailout. And there's always an excuse. There was an excuse back in 2008. Oh, we can't let this happen. It's exceptional. We need to borrow and spend. And then you had 2020. Oh, it's exceptional. We have to save everyone. And now it's the same thing with this energy crisis. And even a supposedly conservative government is going to come to the rescue. They're talking about 100 billion pounds to the rescue to cap energy prices, not just for consumers, but for businesses, and whatever other billions of pounds they're going to do to help everyone. There never seems to be a time when they decide no pain, no gain, right? The old saying. It's always, they're always kicking the can down the road. And unfortunately, I think that's going to lead not to prosperity, because there's a lot of enthusiasm now that this new Prime Minister Liz Truss is going to change everything. But she's starting out by doing the old bailouts. And I think it's not gonna work. And I'll just show you an example. Her chancellor, who is the finance minister equivalent or U.S. Treasury equivalent, this is what he said yesterday, and this is from the Daily Mail. Chancellor in waiting, Kwasi Kwarteng, had already been scrambling to reassure markets that although government borrowing will be looser, it will remain responsible. That's like 1984 talk, right? War is peace. So loose monetary policy is responsible. I mean, it's crazy. Ms. Truss has promised a wave of tax cuts aimed at boosting economic growth. Am I against tax cuts? No. So the other problem we're facing now is that foreign investors are losing confidence in the UK economy. They're losing confidence in the fact that we keep, as a nation, as governments, keep saying, oh, we're going to do just this time, we're going to bail everyone out because it's necessary. We will be okay. We will be responsible eventually, but we have to be loose now. Yeah, foreign investors, they're going to jump ship, and the current account deficit, as you can see here, is indicating that we could see a major collapse of the pound. It could be like an emerging market currency crisis. And and that's not me talking about it. That's Deutsche Bank, one of the major banks here in the city of London. I know they've been a zombie bank forever, but they still put out stuff. So what's the solution to our problems? Well, it's very simple, but no one is going to do it because it's painful. The solution, of course, is cutting the size of government, running budget surpluses, deregulating everything, allowing businesses to flourish, not intervene, cut out red tape. And there is an example of this historically, and I'll touch upon it briefly because we want to go look at how gold is flowing from west to east. But it's the history of Hong Kong after World War II. And there's a very good book I recommend. It's very technical, but you will see how Hong Kong went from being a backwater after World War II. Of course, it was occupied by the Japanese up until 1945, I think. And then the British came back. It was their colony, Hong Kong. But this book here, Architect of Prosperity, Sir John Cowperthwaite and the Making of Hong Kong by Neil Monnery. So just go through some of what is said here in the back of the book. It says, during the 1960s, governments were responding to political unrest and economic challenges with nationalization, centralized planning, and public spending financed by heavy taxes and debt. That sounds familiar, doesn't it? There was intense pressure for Sir John Cowperthwaite, the financial secretary of Hong Kong, to join the crowd. A new biography of Cowperthwaite by Neil Monnery tells of a man who replied to these demands with a qualified no, and in the process became that most unusual of things, a bureaucrat hero to libertarians. His approach would subsequently be labeled positive non-interventionism, meaning governance stopping just short of laissez-faire. That's from The Economist. What is it? What is just short of laissez-faire? Well, if you go through the book like I have, Hong Kong, yeah, there was poverty, the utilities, the public works, hospitals, there weren't any in the beginning, but eventually by running a very free market-oriented economy, taxes came in, and they're still running surpluses. Taxes came in because there was free trade, economic growth, and that allowed them to build infrastructure and to help those like John Cowperthwaite said, or the people who were running Hong Kong at the time, that the market couldn't help. So it wasn't a totally 100% free market, non-interventionist. And I think that's the way we need to go. So we need to see a lot of red tape, a lot of rules and regulations cut here, but I don't have too much hope. So just read John Cowperthwaite's manifesto. It's on page 173. It says that Cowperthwaite should have orchestrated such a response is not a surprise. He accepted the key tenets that underpin the economic policy of the Hong Kong administration. Not only did he accept them, he believed them. He helped shape them, and he was one of their most thoughtful and lucid proponents. He believed that Hong Kong needed to be a free port with free trade at its core. He believed that the market was best at allocating resources and determining what was produced and how. He saw government's role as creating the legal framework in which property rights could be upheld and contracts relied upon. Beyond that, government should mostly step aside unless there was a very clear evidence that the market would not work. He believed in the government balancing its books and not running up debts. Given his beliefs that capital must necessarily be free to move from Hong Kong and the desirability of allowing that to happen, he understood that there were real limits to the ability to tax the productive base of the economy. Logically, if the government should balance its books and there was a limit on tax raising, then government spending must be carefully managed to stay within the boundaries that these rules set. His belief was not only that many of these tenets were right and necessary, but also that following them would lead to a virtuous circle of success. Free trade and free enterprise could allocate labor and capital to the activities that would provide the best return. With good returns and low taxes, business would reinvest, creating further growth. Increased productivity and higher levels of capital would raise earnings and living standards. A larger, more profitable economy with higher levels of earnings would increase government revenues and therefore in turn facilitate higher levels of government spending. Now that he oversaw economic policy, he could entrench these beliefs even more vigorously in Hong Kong. So there you go. He went to Hong Kong back in the I think late 40s, early 50s. He rose to the top, and in the 60s he was the financial secretary. Before that he was the assistant. But how come they did that in Hong Kong, the British? Because it was administered as a colony. Well, that's the whole point there. It was a colony. If you try to do this here in the UK, people wouldn't have it, but people want democracy, whatever it means, which is leading us to ruin, really, because people always want more and more from each other, because that's what bailing out through government bailing out people, it's only taking away from you. So I don't see much hope. We're doing everything backwards. We're not really taking the pain. So I don't have too much hope. Yes, short term, there might be a little bit of enthusiasm for a new administration. So we'll look now at the gold situation flowing from west to east, and I think that's going to continue. That's what happens. I've said it before. When you manipulate the paper price low, you create shortages because, yeah, people are going to take advantage of that. Not just stackers like you and I, but also sovereign stackers like Russia, China, India, and other countries, especially in the global south, of course, because I haven't seen any news for ages that this country is buying gold for its reserves. If anything, the last big news, of course, was when Gordon Brown got rid of half the country's gold reserves. So, yes, what manipulating the price does with a lot of paper, they lease gold many times over here in London. It's even worse than on COMEX through the LBMA. Yeah, people like the Chinese or anyone that can deal in big amounts in the wholesale market, they'll see, oh, gold is trading in London at a discount to Shanghai. So what you do is simple arbitrage. You buy the gold here, you ship it to Shanghai, and you sell it for a profit with no risk, insured and everything. And as long as the spread or the premium from London to Shanghai covers everything and you make a profit, that gold is going to continue to flow. And that's why it's important for us to keep an eye on this premium. One of you mentioned this on the comment section about this premium. I hadn't kept up with it. I hadn't followed it. There's so much to follow. So I thank you guys again to keep me on top of this. And at the Shanghai Gold Exchange, there's an AM and a PM fix. The PM fix in Shanghai is at 7:15 AM London because of the time difference, of course. And today, and it's quoted in grams, so you have to convert it into troy ounces. It's very easy. You multiply it by 31.1035 and you get the troy ounce price. So today, the PM fix in Shanghai was 388.87 per gram. That's 12,095 yuan per troy ounce. And I had to check the exchange rate, US dollar to the yuan at that time, at 7:15 a.m. That was around 695.15. And spot gold at 7:15 a.m. was trading at 1717 spot 50. So doing the exchange rate, the Shanghai PM fix was at 1740. So about $22.50 premium in Shanghai, or 1.3%. And there's a good guy on Twitter. If any of you are on Twitter, his name is, his handle is Michael #Silver Squeeze. It's at Mike Say 98, and he keeps track of all of this. He's been looking at this as well. And the other thing he's been looking is the draining of gold and silver from COMEX, which is continuing. As you can see here, he keeps track of this regularly. And so what's happening? A lot of the gold in the West is flowing east. A lot of the silver as well must be flowing east. Maybe I'll check the silver fix. They do trade silver in the Shanghai exchange. That might be something to look at. And yes, it's not just us that are stacking. It's also sovereign nations, and they do it in big quantities. And eventually, that's how do you stop the draining of gold and silver from the West? Because there's going to come a point where the bankers are going to say, wow, we have to stop this, because they know deep down that they need some gold and silver. Well, they're going to have to allow the paper price to rise to match that of Shanghai, so that it doesn't make it profitable for people to arbitrage. So that's what's going on there, which is very encouraging, I would say. And with that, let's quickly look at the markets this morning. It's 8:37 a.m. London time. Let's look at things in the UK. Yes, yesterday the pound dropped to like 114.40, which was basically the low from 2020 when we had that big, massive crash. It has rebounded. So right now we're almost back to 116. It's up 0.2%. And usually that's what happens in markets. Markets sell the rumor and buy the fact. It's all a little bit to do with the political situation. Does this mean that the pound is out of the woods? No. Things don't go down in a straight line. I still think we are in trouble in terms of the currency and also our balance of payments situation, the deficit that we have there in balance of trade, current account deficit, also the financing of the government with higher interest rates. So it looks like the FX market is short covering. So if we look at the gilt market, which basically reflects the cost of borrowing for the government, yeah, they're not buying this new program from Liz Truss, this new mantra from the new chancellor, or a chancellor in waiting to be, Kwasi Kwarteng, that yes, they're going to be loose right now, but they will be responsible. They're running out of rope, I think. So right now, the 2-year gilt yield is up 6 basis points. It's at 326, and the 10-year yield is up 6 basis points, is right around 3%. It looks like they're trying to keep that from going too much further above 3%. And I've spoken about this as well. We have something called index-linked gilts, and it's a quarter of all the debt issued by the government or the treasury. And that's linked to the RPI, to the rate of price, retail price index, and that's rising at 12%. So, and it's expected to go up to 20%. And with more help for consumers, it's just gonna inflate things even more. The currency is gonna drop even more. And that's gonna create a vicious circle, which is very much opposite to John Cowperthwaite's virtuous circle. And that's why I'm not too positive or enthusiastic about the prospects going forward for the UK economy. Liz Truss might have probably one of the shortest political honeymoons, so to speak, and things I think are going to get very rough. So that's the UK situation. Now we can look at everything else. Spot gold is at 17.16. It's up about $10. The high overnight actually has been 17.27 and the low 07. Silver is doing quite well. It's up 1.5% at 18.40. High has been 44. Low has been 18.10. The Dow futures is up 0.5%. Nasdaq 100 futures up 0.75. S&P 500 is up 0.5%. The FTSE is up 30 points at 73.14. Just to remind you, the FTSE was trading at 7,000 back in the year 2000. So don't get too fooled by the moves in the FTSE. It's been a really bad store of value for 22 years. Eurostoxx 50 is up 16 points. So we know where sterling is. We'll go to the other currencies now. So the euro is up as well, 0.5%. I guess even a dead cat rallies sometimes, right? So that's what the euro is doing as well. Is at 99.82. The high's been 99.86. So par now will be a resistance for the euro, of course. The dollars continue to rise against the yen. So the yen also is another dead count, but it's not bouncing because the dollar is at almost 141.60 now. The high's been 141.74. The dollar is unchanged versus the Swiss franc, 97.93. Dollar is up slightly versus the yuan at 695.44. And let's check the dollar ruble. Well, that's trading at 61. It's almost as if the ruble now is fixed to the dollar. It doesn't move around from that 60 level. So to the other currencies, we got the Aussie dollar unchanged, 67.90. The dollar is down 0.25% versus the Canadian dollar, 131.06. And the Kiwi dollar is unchanged at 60.89. To the general commodity, I saw that OPEC Plus, which is OPEC plus Russia, announced they're cutting oil production, I think 100,000 barrels or something like that. Oil did rally yesterday about 3%. Right now, WTI crude is up 1/3 at 89.15. Brent is up 2/3 at 95.50. High-grade copper is up 1.25% at 3.49. U.S. nat gas is up 1% at 8.83. And the European nat gas, or the TTF nat gas, has actually held up pretty well in terms of not really rallying too strongly. Yesterday, we almost went up to 300. Right now, it's down 11.7% at 217. So maybe the help for the energy companies are allowing them to unwind their hedges, and it's messing about with the prices here. We're seeing, of course, gold, oil, copper, commodities rally. What do I think that's about? Well, I think it's about the fact that the West and its governments are not going to allow things to get painful, and they're going to keep borrowing and spending. The responsible thing, right? As Kwarteng would say. So to finish off, let's quickly look at the U.S. Treasury yield curve. Let's have a look here. I had the wrong one. The 2-year yield is at almost 350. It's up 7 basis points. We're at 347. The 10-year yield is also up about 8 basis points at 327. So there you go. Yields continue to rise. So if you enjoyed this video, make sure you hit the like button. Please think about subscribing to this channel if you haven't yet. And with that, I wish you all a great rest of the day. Take care. Bye.